Frontline stocks pull indices lower as SEBI's move to extend the tenure of derivative contracts casts a shadow amid already prevailing global geopolitical uncertainty. Pharma and mid-cap IT eke out some gains, but financials, FMCG and metals drag. Vipro has clinched a deal to buy Harman's digital transformation solutions business from Samsung for $375 million. The move will bolster Vipro's ER&D business and further cement its ties with Samsung. Apollo Hospitals Managing Director Sunita Reddy has sold a 1.25% stake in the healthcare leader to raise near 1,400 crore rupees to par the pledge on promoters' holding to near 2% from 13.1%. Pledge reduction was a commitment made by the promoters to investors. After the CEO change, HUL is now set to get a new CFO as indicated by CNBC-TV18 in its earlier news break. Niranjan Gupta, formerly with Hero Motocorp, and an old HUL hand will step in, while current CFO Ritesh Tiwari will move to London to look at M&A for parent Unilever. Well, hello and welcome to Business Lunch live from the CNBC TV18 Motilal Oswal studio. I am Vamakshi Doria and it's the final trading session of this week. Well, after 6 consecutive sessions of gains, we're seeing that the markets are taking a small breather. The Nifty has fallen below the psychologically important mark of almost 25,000. There was an attempt made to recover, but that attempt to recover was quickly sold into. For now, the index is trading close to the day's lowest point, down almost 165 basis points. The advanced decline ratio will also come up for you on the screen and will indicate how the broader end of the market is doing. The advanced decline ratio is largely in favor of the declines. For now, 1,600 odd stocks advancing for 1,100 stocks. 1,600 stocks declining for 1,100 stocks that are advancing in trade. As far as sectoral indices are concerned, most of them are in the red. Take a look at Nifty FMCG. That index is now down almost 1% or so. The losses here are being led by ITC as well as Colgate Palmolive. Nifty Metal Pack was also under a fair bit of pressure, but what's doing too well is Nifty Media, and this gain is coming on the back of the move that we're seeing in Z. That stock is up almost 5% in today's trading session. Nifty Pharma as well doing quite well, up almost 0.4%. That index holding higher only because of Ipca Labs as well as Divis Laboratories. But let's also put the spotlight on one more name from the Pharma pack, and that is Apollo Hospitals. That stock is in focus after a large trade saw Sunita Reddy selling 1.3% of her stake. Vinny is joining us for more details. Vinny?
Hi. So yes, we're seeing Apollo Hospitals that's in focus today, recovered from the day's lowest point. Now, when you see normally a promoter selling stake, there's some bit of a jittery feeling that comes in for the stock and a decline. But today, we have seen that recovery coming in. Why? Sunita Reddy, yes, she did sell 1.3% stake in the company. And this is a notification that came in from the management and the company itself on the exchanges saying that they've sold this. Why? So that the promoter, the pledge holdings that are there for the company, that gets reduced. Now, with this, obviously, they're selling 1.3% stake, Sunita Reddy. So promoter holding now, post this transaction, will come down to 28% from current 29.3%. But the pledge holdings, that will also see a reduction, right? That will come down to 2% from currently 13.1%. And that's the main reason why we're seeing a recovery coming in the stock today.
Well, thank you so much for that, Vinny. Apollo Hospitals is now in the green. But do stay on with us. Tell us about CLSA's FY26 earning changes.
Absolutely. So we are seeing some of those changes that have been made by CLSA, and this has come in post the Q1 numbers, where they feel some of the stocks actually deserve some bit of an upgrade that will come in, right? So look at the stocks that they have upgraded first. For FY26, there's an earnings upgrade that has come in for Fusion Finance, HPCL as well as BPCL. Considerable upgrade on these fronts. Now, they believe that on the flip side, there are some downgrades companies that may not do well looking at the Q1 numbers. So for FY26, they have downgraded Divyani International, Bandhan Bank as well as IndusInd Bank. These are earnings downgrade that they're talking about right now. For FY27, the earnings upgrade or changes that are significant ones by CLSA are Dalmia Bharat, Cairns as well as Amber Enterprises on the positive front and upgrade in terms of earnings. While in terms of earnings downgrade that they believe could come in, they continue to see that IndusInd Bank maybe could be in pressure. FY27 earnings downgrade there, Bandhan Bank earnings downgrade as well as Restaurant Brand Asia as well. Some of the rating changes, let's talk about that, right? Rating upgrades that have come in from hold to outperform for Phoenix Mills, Eicher Motors as well as Ashok Leyland, while underperform to a hold rating upgrade coming in for HPCL as well as Fusion Finance by CLSA. Rating downgrades coming in by CLSA from outperform to hold for Nestle and from hold to underperform for Paytm as well as Bharti Hexacom. So these are some of the changes that have come in from CLSA's side post the Q1 earnings.
Well, absolutely. Thank you so much for that, Vinny. Keeping an eye out on all of these counters that you mentioned. But you know what? Nifty index rejig is likely to take place today, and even the FTSE rebalancing is on the cards. My colleague Vivek is here with more details. Vivek?
Important day as far as passive indices are concerned. Both the NSE as well as FTSE will go ahead and announce the changes as far as the respective indices are concerned. Remember, yesterday we had highlighted about the likely inclusion and exclusion candidates of the Nifty 50. Reiterating that, Nifty 50, you could see two new entrants. Max Healthcare and Indigo are the likely inclusion candidates. Max Healthcare could see inflows of close to $400 million, while Indigo could see inflows of close to $600 million. The two constituents that could make the way for these two names are IndusInd Bank and Hero Motor. IndusInd Bank could see outflows of close to $230 million, while Hero Motor could see outflows of close to $300 million. Now coming to FTSE, the key index that we track here is the FTSE All World Index. Quite a few stocks are expected to make their entrance into the FTSE All World Index. The names are Cohance, JK Cement, expect to see inflows of close to $75 million, Chola Finance, Hexaware, KPR Mill, Narayana Hrudayalaya, Autumn Investment, Godfrey Phillips as well as MCX. Remember, MCX could see inflows of close to $58 million. These estimates, these inclusion candidates are broker estimates, and it'll be interesting to see which are the names that make the cut in this particular index reval event.
Absolutely, Vivek. We'll be watching out for that. Thank you so much for those details. But now let's put the spotlight on Vipro. The company announced the acquisition of Harman's Digital Transformation Solutions unit. Rima is here with all of the details. Rima, take us through all of the details with regard to this acquisition.
Thanks so much for that. So the acquired company is actually a unit of Samsung, the Korean giant. Wipro will be paying $375 million for this acquisition. Now, one of the reasons why this stock could be under pressure, along with the rest of the IT pack, so generally there is weakness across the tech pack, is because the acquired companies had flat revenues for the last 3 years. Calendar year 2022 to calendar year 2024, revenues are unchanged at $315 million. Secondly, the acquired company has lower margins. So Nomura says that when they chatted with the management indicated that the deal will negatively impact Wipro's margins by 50 basis points in FY27 on the back of lower margins, integration costs, etc. Thirdly, HSBC also says that the valuation gap between Wipro and peers is at a historic low. And even in the last 1 year, Wipro is actually, while it's down 5% in the last 1 year, it's still fallen less than some of the peers. The reason, though, that said, while you would look and say that the acquisition is not, it's just it's not growing the acquired company, it is still a very strategic fit for the company because it expands their presence in the fast-growing ER&D space, and it also gives them cross-selling opportunities. For instance, Wipro can sell to Samsung. So yes, in the near term, things have been slow for ER&D and this acquired company hasn't grown, but analysts on the whole quite like the acquisition that Wipro has done. Now it depends on how well they can execute it. Back to you.
Well, thank you so much for getting us all of those details, Rima. Wipro for now is trading slightly flat with a negative bias. But on that note, let's take a very short break. We'll get you more news and updates on the other side, so stay tuned. Welcome back. You're watching Business Lunch on CNBC-TV18. Let us now focus on CNN News 18's mega exclusive. US responds for the first time to an Indian channel on their role in India-Pakistan ceasefire and also on India-US trade talks. Aman Sharma of CNN News 18 joins us with the details.
This is the first time that the US State Department is responding to an Indian news network on Donald Trump's claims regarding the India-Pakistan ceasefire as well as the ongoing trade negotiations. The US State Department was asked by us that Mr. Modi's call to Mr. Trump in June, calling Mr. Trump's lie out that, US played no mediatory role between India and Pakistan during Operation Sindoor. India issued a long statement after that call, but US did not issue a readout. We asked the US what it thinks of that particular phone call, to which the US says, we do not comment on private diplomatic conversations. So US is trying to steer clear of how Mr. Modi, did that plain speak to Mr. Trump in June. But US goes on to say that we are proud of the US brokered ceasefire between India and Pakistan. This is what the US State Department had told us. They say that we commend Prime Ministers Modi and Sharif for choosing the path of peace. Also says that US implores India and Pakistan to directly speak to each other so that the ceasefire is maintained. Regional stability is ensured, and we continue to urge both countries, US State Department is saying, to engage in direct communication to avoid future conflict. Of course, India counters both these things, that neither did US play any role, nor will India speak to Pakistan in any manner, because trade and talks and terror cannot go together. Also on the trade talks, we asked the US that what is the status of the ongoing trade talks, because the US team, which had to come on August 25, has put off its visit for now. The US State Department says the trade talks with India are on track. To quote them, the US State Department says, we value our ongoing engagement with the government of India on trade and investment matters. We look forward to continuing to advance a trade agreement that leads to a productive and balanced trade relationship between our two countries. The US State Department has also told us that the president had made it clear his desire to correct long-standing imbalances in international trade and bring fairness back to our trade relationships. This is the exclusive reaction of the US State Department to Network 18 on the questions sent to us to the US.
Well, thank you so much for that, Aman. And this is important because Trump's 50% tariffs on India may come into effect next week, that is August 27th. So that is a date that we'll be watching out for. But moving on, speaking at an event in New Delhi, Chinese ambassador to India said China stands with the subcontinent and blamed the US for being a bully for using tariffs as a bargaining chip. Listen in.
The United States has long been benefited greatly from free trade, but now it is using tariffs as a bargaining chip to demand exorbitant prices from various countries. The United States has imposed tariffs of up to 50% on India and even threatened for more. China firmly opposes it. In the face of such acts, silence or compromise only emboldens the bully. China will firmly stand with India to uphold the multilateral trading system with the World Trade Organization at its core.
Meanwhile, White House's trade advisor Peter Navarro, speaking to reporters, said that India's buying of Russian oil is nonsense and that the tariffs are levied on them because they cheat US on trade and buy Russian oil. Listen in.
Prior to the invasion of Ukraine in February 2022, India bought virtually no Russian oil. I mean, it was like 1% of their needs. So the argument somehow now, as the percentage has gone up to like 30 and 35%, that somehow they need Russian oil to cool their homes or cook or drive their cars is nonsense. 25% because they cheat us on trade, 25% because of the Russian oil. I ask you this, what is the net impact on the Americans because of our trade with India? Well, let's think about it. They have higher tariffs, there are Maharaja tariffs, higher non-tariff barriers. We run a massive trade deficit with them, so that hurts American workers, hurts American businesses.
Well, that was Peter Navarro, but there's no stopping Russia as the country launched a rare drone and missile attack on western Ukraine overnight. Officials confirmed striking targets including an American-owned electronics plant and injecting further uncertainty into the US-led efforts to end the 3-year-old war between Russia and Ukraine. This despite a positive meet between the US President Trump and Russia's Putin last Friday. The attacked Flex factory is one of the biggest American investments in Ukraine. Well, all eyes will be on the Federal Reserve's Chair Jerome Powell's speech at Jackson Hole, as investors will be seeking clues on the path forward for monetary policy. CNBC's Steve Leisman joins us with what's on the table.
There is definitely talk in the hallways here about the Lisa Cook allegations, but the more important focus for investors is the speech by Fed Chair Jay Powell, and he faces a difficult task. Among the issues that he has to deal with is possibly discussing changes to the long-term strategy that could be announced as soon as tomorrow, presidential and market pressure for a rate cut, higher inflation numbers, as well as softer labor market data, and a divided Fed on the issue of those rate cuts. On the divided Fed, Kansas City Fed President Jeff Schmidt telling CNBC that he's open to a cut, but continues to be concerned about inflation.
It seems like that last mile is pretty hard, I'm one of a lot of folks that believe that there's a real hard, true cost to that last % of inflation that's in the system. I think that we might see a tick up. I would say that it's probably the inflation number is probably closer to 3 than it is 2, and I think we've got some work to do.
So how does Powell finesse all this in his speech? Well, first of all, let the data talk. There is more data between now and that September meeting that could adjust market expectations for him. Suggest a cut is possible, but not necessarily promised. Not abandon the 2% inflation target, even while the Fed is away from it. And say that perhaps the Fed is still restrictive even after a 25 basis point cut, and try to limit the expectations to not more than one cut. Futures markets still have an 80% chance of a rate cut in September, but there's a 20% probability of no cut, and that's risen in recent days. So there is some hedging out there in the market that Powell won't very clearly deliver that dovish guidance that markets seem to want.
Well, Steve, thank you so much for bringing us that update. But, with the U.S. markets facing pressure, Ed Yardeni of Yardeni Research says the market is concerned about the Fed and does not expect the central bank to cut rates. Let's listen in.
I think it's about the Fed meeting in September. I think there's a concern that maybe it's not 80% after all, as the odds of a Fed rate cut. If I had to put my own probability on it, it's under 50%. I'll give you 40%. Really? I'm still in the none and done camp. I don't think they're going to cut. And they've got 2 more inflation numbers, and they got 1 payroll number ahead of them. And I won't be surprised if the inflation numbers run a little bit hot. And I think payrolls could be up 100,000.
Well, the potential candidate for Fed Chair Lawrence Lindsay says the Federal Reserve should have cut rates after a weaker than expected jobs report, but doesn't expect it to impact any future Fed decisions. Let's listen in to that.
When I watched the chair at his press conference and read other people's comments, it seemed like the decision not to cut was in part dependent upon the solid jobs picture. And that was what they were presented with at the time of the meeting. And as Keynes said, when the facts change, I change my opinion. And that's why I suggested that, well, in fact, the facts had changed. And, the way to clean it up, I think, would have been to immediately follow through with a cut. I don't think that portends anything, though, for future Fed decisions.
Well, do not forget to catch the entire coverage of the Jackson Hole Symposium today from 7 p.m. onwards, only on CNBC TV18. Take a short break, then we'll get you more news and updates on the other side. Welcome back. You're watching Business Lunch on CNBC TV18. The latest on the online gaming bill front, sources say gaming companies are seeking clarification from the government on compliance with regards to the online gaming bill. My colleague Ashmit is joining us with more details. Ashmit, what are you picking up?
Well, it's just less than 24 hours after the Rajya Sabha, the parliament as a whole, had passed the online gaming bill. And with this bill likely to soon turn into an act, there is a beeline that industry officials are making towards the government, towards the ministry, to get more clarity on the implementation, on the compliance of this bill. One of the key issues that they're likely to raise before the government is that if there is an immediate ban on financial transactions concerning any of these platforms, while that may bar users from putting in fresh money, that also bars the companies from refunding the money that the users had deposited with the platform. So that is something that they're likely to see clarity on, perhaps a staggered implementation schedule. Number two, in-app purchases. There are social gaming applications which provide users the facility of availing of some tools on payment of a certain amount of money. These are called in-app purchases. Are they permissible under this new legislation? That's the second key clarity. The third is real money gaming companies, if they were to continue the same suite of games that they currently have without the money component, if the money deposit is removed, will those games be allowed to survive under this current regime? That's another key clarity that has been sought. And finally, if these non-money games are provided to users in the form of a service and a subscription fee is charged, is that something that is permitted under the current legislation? These are a whole host of queries on which the industry is looking for answers and is now, as we speak, making a beeline for the government for seeking greater clarity.
Well, thank you so much for that, Ashmit. But, there was a flash at the bottom of your screen just a couple of minutes ago. Nazara Tech has told exchanges that associate company Pokerbazi has stopped real money online gaming operations. They've also added that the company will evaluate the future course of action following the enactment of the bill. But news now from the Supreme Court, which has granted relief to stray dogs by modifying its earlier order. Let's go to Ashmit for more details on this. Ashmit?
Well, the Supreme Court issuing interim directions, the biggest of them being a stay as far as relocation of stray dogs in Delhi NCR is concerned. There are multiple takeaways here. Let's go through them one by one. Number one, as far as the relocation is concerned, the earlier order said round up the dogs and relocate them. The Supreme Court saying the municipal authorities can round them up, can sterilize them, but there's no need for relocation. They have to be put back where they were picked up from. That's number one. And the second is with respect to feeding of stray dogs. Again, a contentious issue between the residents of Delhi NCR across the country as well. Here, the Supreme Court says that the municipal authorities will be tasked of arranging for designated feeding spots. That's the only location where stray dogs can be fed. No other location. The stray dogs cannot be fed on the streets. Is simply barred by the Supreme Court, will be liable for action. That's the second key takeaway. The third, the Supreme Court says, why confine this issue to Delhi NCR alone? The Supreme Court says this is an issue that's pending across various high courts. People across the country have raised similar issues, and therefore the Supreme Court has now issued a notice to all the states, to all the union territories, asked them to come back with a reply on what the next course of action should be. And additionally, the Supreme Court has also said that the animal lovers who are here before the apex court, individuals will have to pay 25,000 and NGOs will have to pay 2 lakh rupees to be able to argue their case here, and that money is to be used for animal shelters.
Well, thank you so much for that update, Ashmit. But with that, it's a wrap on this edition of Business Lunch. We're leaving you with the Midcap Index at least holding in the green. Don't go anywhere. Midcap Radar comes up next.